Hims and Hers stock has gone absolutely parabolic in the last couple of weeks, and I think it's fair to say it is very much justified. But is it about time that you sold out of your position or even bought more of Hims and Hers? Is there more growth still yet to come? In the top left here, you can see one of their best sellers, which is their hair loss pills. And that for me serves a perfect reminder to put a hat on, because I don't want to be reminded that it's about time I booked a hair transplant. So as I said, Hims and Hers has gone absolutely parabolic. As we can see here, this stock has just took off approximately now 155% since its lows down in late April. So I think it's fair to say this stock has been a perfect stock to momentum trading, which I have done personally. This has been one of my biggest positions of the year, if not probably the biggest position of the year. So thank you, Hims and Hers gods. More to come, please. I did actually trim a bit of my position, but I am looking to actually buy back in. It's very dependent on a lot of factors, which we will get on into in this video. But we can see here that Hims and Hers is well above all of their exponential moving averages, and on a MACD indicator, of course, it is well into a long position here. Just the momentum is just well and truly on the side of Hims and Hers, but it does look to be as if it is now definitely reaching a certain level of resistance. But it's definitely fair to say that Hims and Hers is probably becoming relatively overvalued in the short term, as we see them reach a PE now of 92. But I still actually have this stock to be slightly undervalued still, as we will get onto in the valuation later on in this video. But let's see what the analysts actually reckon for Hims and Hers currently. When it decides to load, we can see down here that based off of only 14 analysts, we can see that Hims and Hers is ranked in at a hold, which is not ideal, and the 12-month price target is at a high of 85 and a low of 25, with the mean coming in at 46, nearly 47. Looks like I'm blending into the background perfectly here with my bodge job of a Hims logo behind me. But so who are Hims and Hers for those who don't know? And I would just like to give a shout out to another channel here on YouTube called JKR Investing, who has been talking about Hims and Hers for a long time. I'm nowhere near on his level of analysis. So if you are interested in genuine good stock analysis, do go have a look at his channel. I'm no way affiliated with him or whatever, but I do really enjoy his videos and they are really good. And he's been singing about this stock for a while. So Hims and Hers, an amazing company. What do they exactly do? Well, they are in many sectors in the telehealth section of the market. For example, they do SH, which is that bit there. They do hair, mental health, weight loss, and many more things. I won't go into that exactly in depth, because if you are watching this video, odds are you already know and you're not stupid. So, and if you do really want to know, then I have done videos on Hims and Hers going into basics before. It'll probably be above my head if I remember. So what have actually been the drivers pushing Hims and Hers up in the last month? Well, they've seen revenue growth year over year, which has been above 50%, which is absolutely incredible. User metrics, total subscribers and customers, retention rates are all growing for Hims and Hers, indicating that this is more of a sustainable market than initially thought, as now technology moves towards not having to go out to the pharmacy, and of course, just being able to order it on your phone or your laptop, and then a few days later, your medication has arrived. Hims and Hers has now announced that they are going global, which is absolutely huge for the company, as before they were primarily an American telehealth company, but now their global shift will definitely bring in more customers and more subscriptions for the platform, indicating that revenue is just going to go parabolic from here. And that is really why we've seen this growth as of recently. It's almost indicated by the PE, of course, almost to hedge your bets for the future for the stock, as a lot of investors seem to think this is going to go absolutely insane over the next few years. So as I mentioned, Hims and Hers is now heading into a global market. However, they did actually initiate this journey all the way back in 2021, but recently they launched in the UK within early 2024. And as someone from the UK, my American viewers might be interested to know if I actually knew that Hims and Hers was around us here. And I'll be perfectly honest, I had no idea until I looked this up. I didn't know that Hims and Hers was an actual prescription or possibility within the UK. So there's definitely room for growth within European markets for Hims and Hers, which is not necessarily a bad thing, because I do think there's going to be a lot of growth for Hims and Hers within the EU and UK. So there's still a lot more revenue to be taken essentially from this new market. And of course, in April 2025, Hims and Hers partnered with Novo Nordisk to offer a bundled package of FDA approved weight loss drugs to essentially help them reach into a new market alongside Novo Nordisk, which is already a massive name. But Novo Nordisk does, of course, have a lot of volatility associated with it, as when something bad comes out about Novo Nordisk, which is quite often, it will definitely tank the stock. And now you have Hims and Hers, which is almost intrinsically linked to this now, which is not ideal. But I think long term, it's really good still. So don't think that this is now a reason to panic sell just because of this. So now let's move on to Hims and Hers financials. So here we can see a retention rate which comes in at 8.2%, which is really good. Ideally, you want to see it around 10%, but 8.2 is definitely good enough for now. We have a liquidity ratio of 18.19, which is exceptional. That means for every dollar of debt in which this company owes, they have $18 of liquid cash to pay this back in, which is really important, as in the world of business, cash is quite literally king. You can see here a free cash flow, which is steadily somewhat growing, which is really good to see. Again, something which could be improved, but to see free cash flow positive is actually really good. Here we can see an exponential 365-day moving average pointing upwards, so that indicates that growth is definitely heading up and volume is heading up with it, indicating that this recent growth is actually somewhat supported and is less likely to fall off all of a sudden. But I still do think that we might actually see this fall off very quickly. As you can see here, within the last couple of weeks of this growth, the volume has slowed down quite significantly, and yet the growth has actually, from here onwards, essentially, if you can see my tiny mouse, this is almost unsupported. So I think if it was to fall back down, we could potentially see it fall back to maybe a $50-$40 range in between the two, but it's really hard to predict something like that. But that's just what these indicators say. On a normalized distribution here, we can see if I move this to the right place, which would be around about here, we can see that the probability of a positive day is 54% and a negative day is 37%. So that really does just indicate that it's not necessarily a bad thing to be getting into this stock, but there is a lot of volatility intrinsically linked within it. And here again, this isn't actually displaying properly, as this is a 365-day basis. But here we can see that the recent 90-day exponential moving average has been relatively positive, of course, and it does look to be as if we might meet back up with this trend line. So looking here, we can see the PE is obviously 92. It has a beta of 2.23, which means it's 2.23 times more volatile than the ETF such as the NASDAQ. And here we can see a growth rate priced in at 32% over the next year, and a mean surprise rate coming in at an average of 64%, which is really, really good. And this company did go public back in 2021. So now looking at an intrinsic valuation for Hims and Hers, this doesn't look ideal on this section here, as we can see a bullish intrinsic value is set at $72. But that, when you're in a bullish market, a momentous market, I think it's fair to say you aim for the high end. So it's indicating here that there could still be a lot of growth still linked within Hims and Hers, but if you put a margin of safety in, it puts us in at 54%, $54, sorry, and an intrinsic value on the bearish side is $37 with an acceptable buy price of 28. So if we're going between the two of these, we get 54 and an acceptable buy price of 41. So I think it's fair to say in a summary that, especially within a momentum market, it could still definitely reach the high end of that valuation. Here we can see Peter Lynch's valuation, which gives us a result of a fair value. So I think that's relatively accurate. And here, my own formula, when I move my fat head, indicates that the intrinsic value for Hims and Hers is at $75. And this has actually decreased over the last few days, because I actually did this intrinsic valuation a few days ago, which indicates that the probability of a positive day could have potentially increased to a unsustainable situation. It's really hard to say, but the I mean, the equation for this goes off the screen, and if you are really interested and you can actually read my writing, that's the equation in which I basically pulled out of thin air, used my brain to make. So it's a pretty accurate formula because it accounts for free cash flows, WACC, it accounts for dividend yields, which, yeah, that's right, and then it accounts for probability, and it just accounts for an awful lot essentially. And the free cash flow, speaking of this, is actually really strong, as here we can see that a 9-year growth for Hims and Hers indicates that they should be at around $270 in 9 years, but this year they should only be worth $29. But when you're in such a momentous bull market like this, it's fair to say that you're going to go over that. So if you want to see the final results, here they are summarized for you. So looking on the day chart here again, what can we really expect? Well, according to some indicators in which I coded myself, and I don't really want to say that these are massively accurate because I haven't had a chance to back test them yet, I have a result here of a 6.3 risk to reward currently, and on a Sharpe and Sortino ratio, which I didn't code myself, so you can basically rest assured I haven't messed that one up. We're getting a result of 12%, which is in the positive, but it could definitely be better. Furthermore, on an RSI, we can see that we're getting a result of 71.48 currently, which is just below the moving average on the RSI, which I believe is a 50-day moving average. So it could indicate that it's fair to say that we might actually see a lot of buying pressure once this RSI continues to drop slightly. But I think if we were going to see Hims and Hers fall off, I do actually think we would have seen it fall off by now. So I think it might actually be fair to say that people are pricing in a lot of growth still yet to come within this actual stock. And according to this machine learning RSI indicator, which again I didn't code myself because I have no idea how this works, let's just have a quick look. I don't even know what that is, so let's just ignore that. We are still in a bullish position on this indicator as well. And looking at this machine learning code, I couldn't have coded that myself, so what are the actual potential risks for Hims and Hers currently? Well, regulatory risks with the FDA or telehealth regulations tightening will definitely hurt Hims and Hers revenues going forward if that was to actually occur. Competition such as Roman, Amazon Health, traditional healthcare providers, and drugstore chains moving digital will definitely take chunks away from Hims and Hers, as that's kind of their USP, their unique selling point. Furthermore, there is the need for sticky customers in a sense. So with a subscription, you need to keep paying that monthly, of course. And if you're, say, for example, you're on a hair loss pill, you're probably going to be quite loyal towards the company in which you're buying from if you're seeing results. But if you're actually in like a sexual health subscription, then hopefully you're off of it within a month or so. So there's definitely issues around that and its sustainability. But the idea is once one goes off, you have another 2 or 3 that have bought onto it. Ideally, that's not really what you want to see in the world, as that means that issues are going up. But I think that's quite realistic as to what actually happens. But don't quote me on that. So my final verdict for Hims and Hers, and you're probably seeing this video a few days later than I've recorded this, so I hope I have called it right and I hope it continues to be right. I do actually think that we are going to see this continue to rise, but it is definitely at a big turning point right now. It's hit a high level of resistance, and I think it's fair to say if it breaks it's going to go up, but if it falls down, I only expect it to fall down long term to the $45 range. I don't see it going much further than that. It might fall down further than that initially, but I do think it would be at a very sustainable level at $45. And here you can see that I've priced this in at $75 for this year's growth. That doesn't mean it should hit that now, but it does mean that if it was to hit $75, I don't think that would be necessarily a bad thing. And if it does actually go that far, I think the momentum will carry through for this stock, and it will just continue to go parabolic until the sustainability comes to an end and it just falls off drastically. But I think we're going to wait to see what the RSI play actually is, because we are still slightly overbought currently on a day indicator. So I think it's fair to say that people are still hedging their bets with this stock. We're not seeing a massive sell-off in which we did see previously in around February. So it's fair to say this stock does look to be in a bullish setup right now. Furthermore, I have actually just asked ChatGPT what it thinks about this stock. My question was, do you think this stock will go up in one word? I want to know for the next month's time frame. And it said in one word, up. So hopefully it's looking good. It did then also give me another 4 paragraphs to justify, which it essentially says Hims and Hers has demonstrated strong performance recently with its stock price currently at $62. The company reported significant revenue increase of 111% year over year in Q1, reaching $586 million, and then earnings per share rose 300% to 20 cents. The subscriber base grew to 2.4 million, an increase of 38% from the previous year, and the average revenue per user increased 53% to $84. So it's clear to see that ChatGPT, or AI in general, is very bullish about this stock as well, which is really interesting, especially with the current level in which this stock is at. So I hope you have enjoyed this video and found it somewhat useful. I apologize if it was a bit all over the place. It's just my style. I make my opinion up as I go along, but I do think it's fair to say this stock looks to be a massive buy at this opportunity. But that doesn't mean to say it's not without its volatility. So do put stop losses in place, dollar cost average where you can. There is a high probability that this stock is still going to come falling down drastically if a downgrade comes out, or if, for example, negative news around a drug release comes out. This stock is going to absolutely tank, and hopefully by the time this video is out, it's still within the similar parameters in which it is currently. So I hope you have enjoyed this video. Take everything that I've said with a pinch of salt, do your own research. It's very important, and I'll see you for the next video.